this is the preview for the week of August 15th to August 19th. So as the week begins, just on Sunday night, we have Japanese preliminary GDP. Let's see how the country is doing. If the stimulus by the government is justified, if the Bank of Japan needs to do more. It's a preliminary, not the final, and the final figures change. But still a big deal. All in all, coming on a relatively empty calendar on Monday. Monday is a vacation in many European countries. The day of the Assumption of the Virgin, if I'm not mistaken. Many Catholic countries. Anyway, and in many cases, Monday is just a slow day. But Japanese GDP could rock the boat. On Tuesday, we have lots of figures already. Okay, so we have, in general, next week, we have a string of figures from the UK, which will move markets. So on Tuesday, we have the UK CPI for July, post-Brexit. Let's see if prices went up because of the weaker pound or fell because of lack of demand. It could be very mixed for the first month. Also, Brexit-related, the German ZU indicator. Last time it was for July, and it showed a big fall. It fell into negative ground, showing the negative impact of Brexit on business confidence in Germany. But now we're already 1 month further. I expect a bounce. On Tuesday, we also have U.S. inflation figures, CPI. Again, the Fed looks at the core PC price index, but this is still important. And it comes together with U.S. housing data. So lots of figures on Tuesday at the same time, 12:30 GMT as usual. And they need to go in the same direction to move, to rock the boat, okay? Yeah, I mean, all positive or all negative. And then we also have the New Zealand employment report. We talked about that. Moving forward, on Wednesday, we have the UK jobs report. So it's a bit mixed, I would say, because the jobless claims figure is for July, so it's post-Brexit. Okay, the claimant count change. That's July. But the unemployment rate and wages are for June. So it's pre-Brexit. So it'll be very, very confusing. I expect it's very choppy trading in the pound on Wednesday morning. But the big event of the week is on Wednesday, the Fed meeting minutes. These are the minutes from the meeting at the end of July. We didn't have forecasts. We didn't have a press conference. Only a vague statement. That's why the minutes are more important. Okay, first of all, we didn't have enough information in the statement, so now I'll have more. Secondly, when do they intend to raise rates? Of course, the ongoing question. Thirdly, it's after the non-farm payrolls that we had, the positive one. Did they have the NFP? Probably not. They probably had GDP figures. Remember, the document is always revised until the last moment. So it's not just the raw documentation of what happened in that room at the end of July, but a revised document that the writers of this document are aware that it will move markets. And let's see if they are a bit more upbeat because of the NFP or not. Okay, so that's the big event of the week. Some analysts expect a rate hike in September. I can rule it out. If everything goes well, December is on the cards, but I don't see that coming before the elections, at least. Okay. On Thursday, we have the Australian jobs report. Always a market mover for the Aussie dollar as well. Let's see if the Aussie can continue rising. And on Thursday, we have UK retail sales. Perhaps the most important release for the UK, because this is what consumers actually did in July, post-Brexit. So let's see if they did, indeed, as the soft data told us, that they halted buying, okay, that everything looks terrible, or reality is different. Remember, people still need to buy food, clothes, cars, whatever. So this will be sort of hard data. So far, we only got soft data, business surveys, consumer surveys. They were terrible. PMIs, purchasing managers indexes, these are surveys, these are intentions. Forward-looking, but not what people really did. Retail sales and also CPI and also jobs give us the hard data. Also on Thursday, we have the ECB meeting minutes, as usual, coming a bit late. But also here it came after a meeting with no forecast, so maybe it'll reveal some more stuff towards September. Could reveal also differences within the governing council about what the ECB intends to do, how it sees the situation. Germany and other countries are relatively more hawkish. Draghi and most of the ECB are more dovish. Okay, and on Friday, not too much. Easy Friday, only data from Canada. Well, with all due respect, usually this Friday is more busy. So we have CPI and retail sales at the same time. So if you are trading the Canadian dollar, it's lots of action. For other currencies, it could be relatively slow. Okay, I see here a few questions. Jax asks, will the negative interest rate trend continue? I don't think so. It hurts bank profitability. We heard from Draghi last week that the ECB cares about share prices of banks because eventually it impacts lending. Also, the Bank of England cares about the fragile banks. And it doesn't really encourage lending. Okay, so if it would hurt bank profitability and do a lot of good for the economy, great. But it doesn't do even that. I think basically, in general, central banks have exhausted their tools. There's always a bit more they can do, but in general, the ball is gradually moving to the court of governments. Japan and Canada are leading with fiscal stimulus. In the United States, we're in an election year, and the whole chamber there is, well, the whole system is paralyzed. But there is a chance for regime change in this term in the UK. You have a new government. They are not bound to austerity. But let's see what they do. They'll probably announce something in the autumn statement in October or November. And in Germany, maybe we'll have a change of heart because they have elections next year. Okay, in Germany.